Hello and welcome. Thank you so much for joining us. I know there's a lot of great workshops going on, so we really appreciate you choosing to spend the next 30 minutes with us. Our goal is to pass on as much information as we can about offshore banking, and we have structured the next 25 or so minutes as follows. I will first be talking about what offshore banking is, how it can be beneficial to you, what there is to consider, the different jurisdictions, most notably Switzerland, why is it such a favorable and popular safe haven country for offshore banking. And then I will pass the mic on to my colleague Jess, who will be talking about more specifically what does it mean to work with an independent asset manager outside of the country that you live in, what do you need to consider in terms of the process to set everything up, what does it mean to be working with WHVP, which is our company, and then we will do a joint Q&A session. So make sure that you get your questions ready for after. Before we get started, a little bit about myself. So my name is Jamie Five-Thursday. As I mentioned, I'm here to represent WHVP. We are a Swiss-based registered investment advisor. The company was founded by my dad, which you can see in the top right corner of the slide, Robert. He has been at international living conferences before, so maybe one or two of you know him personally. He has retired 3 years ago, and my husband and I, we are now heading the firm together with a fabulous team. We have a wonderful little dog, Henry, who comes to the office with us, so if you ever visit us in Zurich, I hope you're not afraid of dogs. And then if we're not working, of course, we love to spend some time in the mountains. We have wonderful Alps not very far from where we live, so we enjoy hiking, snowboarding, trail running, whatever the mountains have to offer. Now, just to get it out of the way very quickly, offshore banking, what does it mean? What is it? Very simply put, it means having banking relationship in another country than where you reside in. Typically, everyday banking is done in the country that you reside in. So if you're American living in the US, you have most of your banking needs met here, especially when it comes to retail banking, having your salary paid, paying for your groceries, your rent, etc. If you move to Europe, Portugal, Spain, wherever, you probably have your banking needs met there. But for investment purposes, it can make sense to have an investment portfolio outside of the country that you reside in. And that is what we mean when we talk about offshore banking. Now, what are the benefits of doing so? Why would you move part of your wealth outside of the country that you reside in? There are four main points that I want to cover today. There are more. You can come to our booth if you want to hear more reasons, but I'm just going to focus on the most important ones. So this slide is the purchasing power of the US dollar. If you look at it and if it was presented to you as an investment opportunity, you would most likely not going to invest into this basket. However, if you live here and you earn your money in US dollars and you spend in US dollars, you most likely have most, if not all, of your wealth in US dollars. And you might not realize that while you're creating performance, the purchasing power is significantly decreasing and has been decreasing for hundreds of years. Most notably, the past few decades, we haven't seen a single year where the purchasing power of the US dollar has increased. And one way how you can insulate your wealth against this is by moving part of your hard-earned wealth into different foreign currencies. In a country like Switzerland, where we're very small, we have a lot of other countries around us, we have a lot of other currencies, it is normal to have various foreign currencies accounts set up. You have smaller transaction costs, and it's a lot easier to buy and sell currencies. And it's also a lot easier to invest into investment opportunities that are held in other currencies. So most of you are probably familiar with the concept of diversification, not having all your investments in one basket, not investing in just one industry or one company. But what a lot of people are missing is that the US is not everything that the world has to offer in terms of investment opportunities. So what we see here is the market capitalization in terms of the US versus the rest of the world. So the US market is huge and significant, and it has also been very profitable over the past few years. But again, it's not everything. It has been quite a bit below 50% for a while now, so we're currently at about 42%. So that means if you are exclusively investing into the US stock market, you're missing out on over half of all investment opportunities that are out there. Again, one way how you can solve this problem is by appointing an investment manager in a different part of the world that has access to other markets, has access to other kind of information, other stock markets, and thus other investment opportunities. Another very important point that comes up time and time again and has become increasingly important over the past few years is that the US is one of the most breached countries in the world. So privacy protection is something that is very important to a lot of people, and it's something that we take very seriously in Switzerland. So we don't just have a culture of privacy protection, but we also have rules and regulations that take your privacy protection very seriously. Just a few days ago, on September 1st, a new privacy law was passed that really increased the level of privacy protection that the companies have to offer to their clients. And then lastly, the US is one of the most litigious countries in the world. So if you live here, you probably have either been affected yourself or you know someone, family member, friend, colleague that has been affected by a frivolous lawsuit. And it's very important to take that risk seriously, to think about asset protection, to think about how you can protect what's rightfully yours. One way to do that, one way to add a layer of asset protection to your wealth is by moving your money outside of the US, so it will be less visible and you will be less prone to lawsuits. It's also possible to set up asset protection structures and then have those managed outside of the US. Now that we have talked about the benefits of having an offshore bank account or having an offshore investment portfolio, I want to talk a little bit about Switzerland. And I know I'm biased. I was born and raised in Switzerland. I love my country. I feel very proud to be living there. I feel very lucky. But there's also a lot of objective reasons why Switzerland has been the most popular hub for wealth management for hundreds of years. So when we look back at the Swiss history, Switzerland has not been actively involved in any war for several hundred years. It's a neutral country. It has been neutral for a long time. It does not belong to any power bloc. It's not a part of NATO. It's not a part of the European Union. It's really just an isle of independence in the heart of Europe. On top of that, we also have a proven track record of economic and political stability. And that goes so far back that during the Middle Ages, royal wealthy families in Europe brought their money to Switzerland because it was one of the most stable and secure countries, and that continues to this day. And then the last point is the client privacy, the Banking Secrecy Act that has been a part of our culture, part of our regulatory environment for a few hundred years, which has caused Switzerland to be one of the biggest banking sectors or banking countries in the world. So if we look at it in terms of GDP, Switzerland is has by far the largest financial services industry. We see here the UK is following more or less closely behind, but Switzerland manages 5 times as much money as it makes in a year in their GDP. You also see the US on this slide on the right side. It also has a big banking industry and financial sector, but in comparison to its size, the Swiss financial services sector is 5 times larger. Now, where does that lead us today? Switzerland has a population of about 8 million people. You can drive through the whole country in about 4 hours, and we have over 243 banks. What's very important to note is what we specialize in, what we are very good at, is private wealth management. So in the US, we see more risk-prone activities like investment banking, for example. In Switzerland, we like the risk-averse ways of doing business, which is great when it comes to something like preserving wealth. So we manage 25% of all wealth that is managed across borders in the world. Again, in comparison to our size, that is quite significant. We are still today a very stable country. We have also seen that how we fared to the pandemic. We have seen that in terms of inflation numbers. So our inflation peaked at 3.5%. It is below 2% again. So Switzerland to this day is really very beneficial for the people that live there, but also the people that have their money there. And then lastly, it's a very wealthy nation. We have a very low debt-to-GDP ratio. So our debt-to-GDP ratio is currently about 42%. We have a debt rate that is being taken very seriously. It's not going to be increased. If a politician wants to spend more money, they will have to save money in another department or another sector their field. The US, in comparison for those that don't know, has a debt to GDP level of about 140%. And that has been it from my side. I'm going to hand over to Jess, who's now going to talk a bit more about the specifics of working with an independent asset manager.
So hello everybody, my name is Jess Roberson. I'm one of the team members at WHVP. Just a little background on me so you know who's up here talking to you. I am American, born in Tulsa, raised here in Colorado. And through my travels around the world, I met a Swiss woman, fell in love, moved to Switzerland, and that's what led me to be a part of this company today. When I studied finance, I was blown away that offshore banking was not really talked about in the wealth management courses. And so when I got involved with this, I was super pumped because I think it's something that adds a lot of value. So what I'm going to be covering with you today is how the setup works, what it looks like, and what you can expect. The relationship from the beginning to the account being set up and the investments, what that's going to look like. So over here we have the setup. We like this picture because our focus and the private bank's focus in Switzerland is the client is centric. They're the number one person involved. So what we do is we work with a limited power of attorney with you as the client. We've set up contractual agreements with top-level private banks in Switzerland, and we introduce you to the bank, and the account is opened in your name, whether it's a sole account, a joint account, a trust account, an LLC account, an individual retirement account, so it's owned by you. We work with the limited power of attorney to help manage the account and place the investment. So next I want to talk about what it kind of looks like working with an independent asset manager. Why is it important that it's an independent asset manager? It's important because often banks and companies that are not independent will want to place products inside of your portfolio that also benefit them. It doesn't mean that it's necessarily not beneficial to you, but there's a little bit of a conflict of interest. As an independent asset manager, we are able to really focus on what's going to be the best situation at what bank for you, and if the bank starts acting inappropriately, we're going to be able to have the leverage and ability to say, hey, we think this is not good, we have another option, we think you should move it out because the relationship should go south. On your behalf, not from our behalf. We always look for our clients' responsibility and fiduciary responsibility first. So we have also focused specialization, which is focusing outside of the US dollar and the US stock market. So that slide earlier that Jamie showed you, we're looking to benefit and create a portion of your portfolio in that other 60% of the market so that you have assets and investments that are being held in a foreign currency, denominated stock, bond, precious metal, and those foreign currencies. So a big portion of working with an independent asset manager is they're usually small in size. When you go to a private bank directly, your relationship manager will probably have a couple hundred clients, so you'll become a number very quickly. With the independent asset manager, we're usually small in size. Our team, we'll see later, is 5 people. You have direct access to the owners, and that allows us to have a lot of weight in dealing with the bank and ensuring that problems are solved if they should arise. And the further point there is the continuity. And what we mean by continuity is if you build a relationship with any kind of financial institution, it's based on trust. And so you might go to a private bank, you might love that relationship manager, and that relationship manager will want to take a job at another bank. So you're going to have to switch. Or maybe you want multiple bank accounts offshore. So you'll have one relationship manager at one bank and another relationship manager at another bank. Creates it a little bit more difficult or more work for you. Working with an independent asset manager allows you to have one relationship manager, the flexibility to have multiple accounts, and to really build that trust long term. And should you have to move from a bank, should something you might not like that bank, or you think there might be another option, you're going to be able to just continue in the trusted relationship you have while setting up multiple accounts. The other benefit to working with an independent asset manager is the choice of custodian and the lower minimum account size. So often when moving assets offshore private banks in Switzerland want a minimum of $1, $3, $5 million. When you work with an independent asset manager, Our most popular size is 500,000, but you can get the account minimum, the initial investment, as low as 250,000. So it makes it much more accessible because the independent asset manager goes with their full weight to the bank and can create a contractual agreement that benefits you more. All right, so what does the process look like when you've decided, okay, I think I want to open an account offshore? How do I go about it? So first what happens is you set up a free consultation with the independent asset manager, so I'll speak from our side as WHVP. You set up a free consultation with us where we get to know you, we talk with you, we understand your private situation, your financial situation, what you're looking and hoping to accomplish by moving assets offshore, and it allows us to build a mutual understanding of each other. At the end, we both have to decide we want to work together, and when that decision is made and move forward, then we ask you for information that we can use to present you to the bank to get the account opening documents. This is known as your KYC documents, or Know Your Client. This is often your passport copy, source of funds, so depending on how the funds were generated, it could be a pay stub, or it could be a will where you inherited the money with a death certificate of the person who passed the finances on to you. And with this information, we can then go to the bank, get the account opening set, which we bring back to you, and we walk you through what needs to be done, what needs to be signed, and we give you the instructions of how to do it. So our approach at WHVP is to not just dump everything on you. We want to walk through the process with you. Once that happens, and the account information is, all the paperwork is done, you send it back to us, we present it to the bank. It takes about 3 to 5 days to open the account. Once the account is open, you send the funds in. Once the funds are in, your relationship manager reaches out to you to set up the initial investment meeting. So during the time that you've been doing the paperwork, we've been working to create a portfolio that's tailor-made to fit you and your financial situation. The initial investment meeting, before any movements are made with the funds, we sit down and talk with you about every position, why we like it, what we think the long-term positioning of the portfolio is, and make sure that you understand clearly what our mindset is and that it matches yours. Once that happens, then we ensure that the investments are placed appropriately, and we make sure that we have ongoing communication with you. That could be 4 calls a year, 1 each quarter, depending on what service level you have. And then you get our market analysis, which is every 6 weeks, which is called the Swiss view, that gives our perspective on the global economy and what we think it's doing and where we think it's heading. So now I'd like to introduce our team. This is the WHVP team. All the way over here, we have Danny Collar. He's the head of our legal and compliance. He makes sure that we're up to date with our licensing and registration with the SEC and the Swiss authority. Then you have myself. I take care of the back office work, marketing, and I help clients onboard with us and set up their accounts depending on what structure it is. Then in the middle there, we have Julia Fernandez. She has over 30 years in the private banking sector in Switzerland, and she's one of our managing partners, along with Jamie, who you saw earlier, and her husband Urs, who are the CEO and CIO of our company, as well as managing partners. So, I'd like to introduce our services to you. So we'll start here in the middle with asset management service. This is by far our most popular one. The minimum investment is $500,000 US dollars, and the management fee is 1.5% per annum. This is a tailor-made portfolio. Again, we look at your financial situation, what you already have invested in the US and other places, and we create something that really fits you and your individual situation. Then here on the left, we have the permanent portfolio. This is a standardized mandate. It's important to note the difference between asset management service and permanent portfolio management service is that with the asset management service, you get the choice of your custodian bank. So you get to choose from the banks that we have set up contractual agreements with, and you then decide, okay, I want it to be in Switzerland, or okay, I like the bank in Liechtenstein, and then we move forward there. With the permanent portfolio service, this is a set service that we have with a single bank, so you don't get the choice. It's $250,000 minimum, investment and a management fee of 1.2% per year. Again, not standard. It's a standardized portfolio, so it's more if you want to dip your toes into the waters of international diversification and see what it's like to really place a weight against your portfolio in the U.S. Finally, we have a concierge service. This is $1 million minimum, a management fee of 1.5%, and a flat fee of 10,000 Swiss francs a year. This comes with the tailor-made service and the concierge service, which is 20 hours of free service where, let's say, there's a Rolex being released to the market, but only people who live in Switzerland can buy it. You can say, hey, can you please buy this for us? And we'll work on getting that watch for you. It also includes a visit personally, wherever you are in the world, where we come and discuss everything with you once a year. It's important to note that all of our services can be held in personal accounts, joint accounts, IRAs, or your individual retirement account. You can move that offshore, self-directed, trusts, and LLCs. And so all of the services can be held in those various structures. So I've come to the end of my presentation. If you guys have stopped by our booth, and maybe you've already signed up for the 5 silver coins, if you want to sign up now, we have the sign up here, right here, so you can come after the presentation and sign up. And on Monday, so tomorrow morning, we'll pull the winner, check your emails, and then come to us and collect it. So now we're going to go into Q&A. I think we have time for a few questions. If you guys have any questions further that you don't get to ask, you can see our email address just below info@whvp.ch, or you can go to our website and contact us directly from there.
Yeah, thank you for that. Where does FACTA come into play? Is that between the custodian bank and the U.S. taxpayer, or does that involve the asset manager, or how does FACTA come into play in terms of information collected by the U.S. government?
Yeah, that's a very important question. So you have an layer of privacy protection, not towards the IRS. So we are registered with the SEC. The banks understand the U.S. rules and regulations. The account will be reported to the U.S., and you have to make sure that you file the account properly. What we do is we issue a yearly tax statement to make it as easy as possible for you to get all the information you need to file the taxes. And your tax situation is not going to change. So you're not going to pay more or less taxes. It will be the same as before.
Any more questions?
So we pay you 1.5%. How much does the bank charge?
It depends on the volume of the portfolio, and it depends on the bank. This is why we haven't put it on the slide. Typically, it's between 0.3 and 0.5%.
In the standard portfolio, easier question to answer than the customized, but what investment vehicles are you using in that portfolio?
That's another great question. So we have 4 main asset classes that we use, and that goes for all the portfolios. We have foreign currencies, international stocks, bonds, and precious metals. How it is allocated depends on your situation, but if you're interested, you can shoot me an email, or you can send it to info@WHVP.ch, and then I'm happy to send you a bit more information on the investments themselves and the investment process.
If you make us money through those portfolio vehicles you just talked about, and there's profit generated, how is that taxed? Is that taxed in Switzerland? Does it get reported back to the IRS? What happens?
You don't have to pay any taxes in Switzerland. The only taxes that apply in Switzerland is a 35% withholding tax on dividends or interest that we will get back on your behalf, so you don't have to worry about that. You have to pay taxes as you would in the US, so capital gains, there's no change essentially.
Any more questions?
Can you repeat your 4 investment assets?
2 seconds, I'll be down to you now.
I was curious when the market dipped the last year or so, and how did your investors do compared to American market investors?
So it depends on the risk profile of the client, right? We have some clients that are more aggressive and some people that are a bit more conservative. Generally speaking, we are more on the capital preservation side of things. So that means that if the markets drop, we tend to do better, we tend to lose less, because we are more on the conservative side. So our main focus is keeping and growing what is yours, but not astronomical returns that then come with a 30% loss in a difficult year.
We still have time for one or two more questions.
What happens to your business when crypto becomes more popular with all the direct transactions?
I don't think that's going to affect us too much. I mean, we do have banks who have the option to store crypto. We ourselves, we don't invest in cryptocurrencies just because it doesn't fit our risk profile. It's too aggressive and volatile for the services that we offer. If clients want to do crypto, I mean, by all means, you can take 1% or so and do it by yourself, but you don't need us to do that for you. And I think if it becomes more popular, it will just be one asset class that we don't offer. So for example, we also don't offer real estate. We are very niche in what we do, and the clients that we work together with want that. If you want to have like a highly speculative crypto portfolio, then we're not the right person for you.
Does your account require the filing of the 142 form here in the U.S.? It's over 10,000?
Yes.
Yes, the FR. So with the FR, well, we're not tax specialists. If you have any kind of account like this, you have to fill out your FR. And it's very important that you do. And anyone that says that you don't ever listen to them.
Would you repeat the 4 different asset classes again? I believe somebody asked that question.
Yes, of course. It's foreign currencies, international stocks, bonds, and precious metals.
So, if the fund makes money, what is the tax rate?
I can't answer that for you. I'm not a tax specialist. I don't live in the US, but it's not a fund. It's all direct investments. So you'd have to discuss that with your CPA, but it's the same tax rate than if you had a portfolio in the US.
Okay, so it's not 35%. No, yeah, I was a little bit confused there.
No, it's like most investments, it's capital gains. So
Right,
like
so
if
we're
the
gonna-
market has a loss, if you had losses, it's
Right, it carries over, so on and so forth. It's
Maybe I can quickly clarify the 35% that I mentioned, just to make sure that there's no confusion. So that's on the Swiss side, but it's only on interest payments and dividends. So it's not on the gains, and you will get that back. So it will be deducted and withheld, which is why it's called the withholding tax. We are going to reclaim that on your behalf.
Thank you.
Anybody else?
Well, fantastic. Thank you so much for being such an active audience. I appreciate it. Again, if you would like to schedule a complimentary consultation, either here at the conference or a video meeting afterwards, feel free to send us an email. And for those who haven't participated in our raffle for a chance to win 5 silver coins, you can come by here and leave your email address and check your inbox tomorrow morning. Thank you so much. Enjoy the rest of your time here.